All right, what's up, guys? We got earnings for next week, as well as three potential stocks or options plays for next week's earnings. And as we can see on our screen here, we have a lot of companies reporting earnings, but there's only going to be three that we're really going to be watching closely. So the first one is going to be Blink, of course, Blink Charging reporting earnings Thursday after market closes, sitting at a price point of $22.55 per share. As we can see on the year chart, it's been pretty volatile. It is down almost 30%. So it's quite a big drop. But it did hit all-time highs around $47 per share, which is pretty good. Before dipping, like most other growth stocks in late 2021, early 2022. So this stock has been doing pretty well in the past 5 years, so we do have to keep that in mind. This used to be a penny stock, but they've proven themselves. There's a lot of charging stations out there, and overall, people are just really excited for the electric future that's to come. So let's head over to the options chain and go over some potential plays. We really like this stock at the $20 support line. So we can do a March 11th expiration date. We can go to sell, put, because we're going to be cashier put. The best strategies to play options is actually to sell options, whether it's selling cash puts, covered calls, or even doing credit spreads. But for this one, since the stock price is very cheap, we're going to be doing a simple cashier put, which is just selling a put. So you do need about $2,000 of collateral in order to write one. So as we can see on our screen here, a $20 cash put is going to yield you $75 of premium per contract as long as the BLNK stays above $20 per share, which is pretty good. Otherwise, we just have to own 100 shares at $20 each, which is not a bad cost basis. Cash puts are a win-win situation because you're either making the profit on the premium or you're getting shares at a cheaper price. Because remember, our cost basis is going to be $20 per share compared to $22.55 per share if we were to outright just buy 100 shares. So this is why it's my favorite strategy, especially during earnings, because that means implied volatility is going to be a lot higher, which is going to be good for selling contracts. So that's going to be a potential play on Blink Energy. Next up, we have RIVN, RIVN Automotive, which is reporting earnings March 10th after hours. So that's going to be Thursday after market closes. Very similar to Blink Energy in that we are very excited for the electric future, and especially with the price of gasoline going to be skyrocketing due to the Russian-Ukraine conflict. Electric vehicles are definitely going to be very attractive. And Rivian Automotive definitely has some really sweet electric vehicles. Doug DeMuro actually did a review on the R1T truck, noting that it's one of the coolest trucks that has ever been made. So really good stuff. Looks really promising, and it's definitely a contender for the Tesla Cybertruck. So it's going to be a very good alternative to that. Rivian Automotive, very volatile stock. It's down quite a bit from its all-time highs of $172 per share, sitting at price point of $47. So about a negative 66% decrease. So it could be a really good dip buying opportunity. As with other stocks, we saw Blink Energy, NIO is also down. This is just a really good time to buy into these discounted stocks as the whole market is down quite a bit. And if you're patient, just buying and holding into some of these promising companies will yield you a lot of money in the long term. Just buy, hold shares, and don't even look at your portfolio, which is just random noise, because in the long term, these investments are going to make you potentially a lot of money. So let's head over to the options chain. March 11th expiration, and as we can see, there's tons and tons of premium to be made, as these contracts are very pricey. So we can do a $40 cash put, 77% chance of profit, and we can make $150 per contract. So it's a pretty good return on your capital, and a $40 strike price is very far out of the money. And so if you do get assigned shares, $40 per share is definitely not a bad cost basis to get assigned. And we're receiving $150 premium to open these contracts, which is pretty sweet as well. So that's going to be options play number 2. Now the third one is going to be CrowdStrike. Wednesday after the market closes, CrowdStrike, it is down around 50% from its all-time highs of almost $300 per share. And just like Cloudflare, which is another cybersecurity stock, it is down quite a bit. As with most of the market, as we saw with BLNK and RIVN. So now is a very good dip buy opportunity, and with the whole movement to the digital age, cybersecurity is definitely more important now than it is ever before. A lot of companies are moving digitally, and they need cybersecurity with the influx of hackers that we've seen that has risen during the pandemic. So we definitely are looking at adding some of these to our long-term portfolio, but there is some options plays to be made as well. If you have a larger account, maybe $15,000 of capital, you can sell a $150 strike put for next week. High profit potential here. 85%, 84% chance of profit on a $150 strike. You're collecting $230 of premium. That's over a 1% return in 1 week. Very, very good options play, in my opinion, and very high chance of profit. It's very far out of the money. It's currently $27 under the current stock price. So $150 per share is definitely going to be a really good cost basis if you do end up getting assigned. So win-win situation there. High premium, low strike price. So that's about it for this video. 3 stocks we're looking for next week. Lots of companies are reporting earnings, but of course, don't put in too much money that you can't afford to lose. Market is very choppy, so make sure you stay safe.